What's going on, everyone? Welcome back to another episode of Insightful Principles. You are now watching the 27th episode. My name is Kevin Jenkins, and I'm here with a special guest of mine, Malek Barber. And you guys are definitely in tune for a great show. I want to discuss with you all throughout this episode. We're going to really discuss how to create a financial plan. Malek is going to go into how he's a financial advisor. He works with Northwestern Mutual. And me and Malek actually got a chance to connect through social media. And I reached out to him because I seen that he was a financial advisor and he also has a background in basketball. And one thing about this show is I love to bring on guests that I share similar interests with and where they're able to also share their journey and really talk on their process of just entrepreneurship and building a business. So I'm so great, Malek, you decided to come on the show. How's everything going?
It's going well, man. Going well. Shout out to Quan for getting us connected, man. Appreciate him for that. But yeah, we got the opportunity to chop it up, and hopefully you guys find some insight in this. Glad to be here, and glad to spread some knowledge to everyone that's watching.
Definitely. So to get it started, can you kind of share with the world a little more about your background, where you come from, and also how you develop an interest for personal finance?
Yeah, so I'm originally from Northport, Florida, which is on the other coast. Most people probably know Sarasota, Florida, like Siesta Key, that's kind of the spot. So I grew up over there, and Northport isn't the most economically developed area in Florida for sure. We're up and coming, so stay tuned. But when I was growing up, they're definitely lowered. So when I'm growing up, I've always had the aspiration of, I wanted to be in a position where I could help people, help myself, and most importantly, help my family. And, you look at whatever goals that you guys have out there, all of them, unfortunately are money driven. If it's buying a house, if it's, you want to let your kids play AAU, go to a basketball tournament, in another state, all of it has some money aspect. And so I just knew that, some things that I wanted to do growing up, I didn't, back then I didn't realize that a lot of it was probably, money driven, that I wasn't able to do it. But now looking back, that was kind of the big thing. And so I just knew that, after I got myself college educated, after I got myself into a profession, I just wanted to be able to help people, work towards their goals and just achieve whatever they wanted in life. And like I said, money is a big derivative of allowing that stuff to happen. So, I'm just got into the industry because I love helping, and that's what it's about.
Yeah, I agree. It's great to see the path that you're going down, and it's also a blessing to see another brother as a financial advisor. I think that I'm also working on going down the same path as you, and I understand with becoming a financial advisor, there is some licensing involved. Yep. Now, for someone out there that's looking to become a financial advisor, can you kind of talk on the licensing that's involved and also how you were able to get through and pass those exams?
No, for sure. And so just like any career, your doctor's not going to be a doctor without going through years of education. Mm-hmm. Any specialty, if you're in a business of helping people, you gotta be an expert in that field. And so, the very first and foremost one it's called a 215 license, which is basically an insurance license where you can look at disability insurance, health insurance, life insurance. Mm-hmm. Because I think that's an area that people take for granted sometimes and don't necessarily think about when they think of financial planning. But that's kind of one of the very first ones that you should look at having in place. Just because it's a huge need, and so the 215 allows you to do those and broker those insurances. And then on the investment side, which is what everyone loves doing, everyone wants to figure out how to turn that dollar into 100. Mm-hmm. And so the investment license, you got to take something called the SIE, which is the Securities Industry Essentials.
Yes,
I think that's the breakdown of it, of the acronym. Mm-hmm. The SIE is kind of the very first one you take in the investment field, and then you go on to taking the 6. You can take the 63, the 65, the 66, the 7. There's all these different investment licenses you can take, but each license allows you to do something different. Mm-hmm. And so I want to say the 7 is what allows you to sell individual securities. Like, if you wanted to sell, like you wanted to place a trade for someone that wants to buy 10 shares of Apple, I think you would need the 7 to be able to process that trade. Mm-hmm. And so like the Series 6, 63 is more for like mutual funds, ETFs. Not going to get too much in the weeds on what each of those things are specifically. If we get to it in this episode, we'll get to it. If not, stay tuned for the next episode or one of his previous ones that gives you a further breakdown of each of those things specifically.
Thank you so much for explaining that. I know we gonna have more opportunities, so we definitely will get a chance to break it down even more. So I wanted to ask you, I know when I speak with people, when it comes to financial planning, I always like to express that there's really 5 components. You have the investment, retirement, you have, whether it's tax planning, estate planning, it's so many various different areas, insurance planning. Can you kind of touch on what each of those areas mean to you, and especially when you're developing a financial plan for a client, how you focus on those 5 areas?
Yeah, so for sure, each of those areas specifically, depending on where you're at in life, depending on what life stage you're in, is going to present which one is more important to you right then. A 50-year-old that's getting close to retirement, wants to retire in the next couple of years, retirement planning is going to be something that's going to be in the forefront and one of the basic things that we put in front. If I'm working with a 20-year-old, which some people say that I'm not old enough or I'm not there yet to be planning, I definitely work with some younger people, and there's still things that we look at, but it's not necessarily, we're not super focused on retirement planning because that's 30, 40 years down the line. And so is it important? Of course. The same thing with estate planning, the same thing with taxes. All those things are important, but it's very dependent on where you're at in life and what life stage you're at, because if we can't get you to budget on the very first and foremost, we're not going to worry about taxes.
Exactly. You got to focus on the basics.
Right. You got to focus on the basics, because all those areas specifically, once you're able to focus on more of those areas, that's when you're doing well for yourself financially. Because people that don't have an estate, guess what? They're not doing estate planning.
Exactly.
So you want to be able to focus on all 5 and have a plan for each of those 5. But if you don't, you got some room to improve. And so, just kind of where I look at, because I mainly like working with people that are 20s, 30s, young in their career, because guess what? We're both in that same stage, and so I want to help people that are kind of on the same path and in the same situation that I am. And so the biggest thing that I see, is that we're not worried about retirement planning. Yes, it's important. Do I tell them to allocate something for it? Yes. But a lot of times we got to focus on, what's your budget look like?
Yeah, you're right. You keep going.
Okay. We're going to touch on this a little bit later, but most people don't have an adequate savings. So yes, a lot of people are getting their education from social media, from Instagram, from TikTok, but all those pieces of information are very, sheltered, and there's not a lot of context with it. And so, some people come in, like, oh, I seen on a TikTok, they're like, yeah, Roth IRAs are great, and I'm like, all right, yeah, they're right, it is great. And then, they want to open one. I'm like, well, we're not going to put money away for when you're 59 and a half until we can start putting money away for your bills this month, or the house that you want to buy in 3 years. And so each area is super important. You want to be able to be in a situation where you can have a plan for taxes, retirement, estate, insurance, like all of those things are important, but you got to make sure you take it one step at a time and build up so that you're in a position to where all those pieces of planning are needed.
Yeah, I totally agree, and I always like to stress to people that a lot of these different areas, come down to your risk tolerance, your time horizon. Yep. Like you said, your time horizon. Someone in their 50s and 60s is probably going to be focusing heavily on retirement in comparison to someone in their early 20s. I think you got to start with the basics, and when it comes to budgeting, having a proper insurance plan, making sure that your life is secured first, you'll eventually be able to branch into these other areas. So you hit on a lot of important points. And another concept that I wanted to talk on is, when it's what advice can you give to someone when they're trying to build a financial plan? Like, where should people start first when they're sitting down at the dinner table, they're trying to figure out how to get started? What advice can you give them?
Start with the basics. That's as simple as it gets, to start with the basics. So really the first 2 things, and a lot of people hate me for it, is like when I sit down with someone, like they come at me, guns ablazing, saying, I want my money to grow. Let's talk about Bitcoin, let's talk about crypto, Tesla stock, Apple stock, all this stuff, all the hot topics. Like, of course, I want you to be there, but we can't do that until we look at the budget. What money's coming in, where's money going out? If we don't have an understanding of where that's at, there's nothing, we can't really build upon anything, because what people don't really think about all the time is that with stocks, they go up and down. Most people know that, and that's why some people either do it or some people don't. But with investing, you don't lose money or you don't make money until you take the money out.
Yep.
And so, if you don't have a strong hold on your budget, or having an emergency fund in place, and you kind of start putting money aside for investments, and let's say your investment does drop. They all do drop at some point, but most of the time they go back up. Your investment drops, and now you have to take the money out because the car broke down, you need to get it fixed. Guess what? Now you put money in and you lost money because you have to take it out and put it for something that you actually need. And so, I would say you would want to start with the basics. Make sure that you have a good understanding of what you're spending, what you're making. Make sure that at the end of every month that you're not in a deficit, so that means that you're not spending more money than you're making. You ideally want to be in a surplus, but you also want to be in a position where you're setting money aside for savings every single month. And that's the most basics. I understand everyone wants to be investors, everyone wants to be, put money in real estate, like Grant Cardone, or all the gurus of investing and all the people that are making money doing all these great things. But you got to start with the basics. No one, gets to the top of the mountain without climbing it first.
Yeah, I mean, you're definitely hitting on a lot of important points. I think that your budget is what's going to allow you to figure out if you have the money to invest. I think you want to start off, like he's saying, having an emergency fund, having savings, having that security blanket in place. So in case things go wrong, you don't have to rely on pulling your money out the stock market to take care of an emergency. Because in reality, you want to make sure you have your emergency fund in case something goes wrong, and the money that's building in the market, you don't really want to touch that. You know what I mean? So it's definitely, like you said, starting with the basics is definitely important. Now, I wanted to talk on your experiences as a financial advisor right now at Northwestern Mutual. We got a chance to briefly talk off the camera where you said, you're only 6 months into this position, and you're doing a lot better than people within the company that have been there a lot longer than you. So can you kind of touch on, your strategies or what you've been able to do to be able to build a great book of clients within your business?
Yeah, no, for sure. And so, I have been grateful to get off to a very hot start in the business. One of the top performers in our entire region. I just recently hit a goal in our district that no one has hit in 3 years. So, that was exciting, exciting to do that. But one of the biggest things with really any job that you're in, it could be finance, it could be, car dealership, car sale, it could really be anything that you do. Whatever your specialty is, you understand that what you do is beneficial to people. And so how do you get people to go through with it if you know what you do is beneficial? So just being able to connect with people, getting people to understand, and you show them your value proposition. So just communication is key. Getting people to understand, get on the same page as you, because usually 9 times out of 10 you see the benefit of it, but where the money's made and where you get people to follow through on what you do is by being able to communicate that and get them to see everything the way that you see it. And so that's the biggest thing. And then you're not going to just jump into anything, and no one's going to trust you until you build that rapport. So just being consistent. That's one thing I tell a lot of people, is that no matter what you're striving for in life, consistency is key. Really, with whatever you're doing, you're trying to lose weight. Guess what? Work out every day. You diet every day. Do something different every single day, even if it's a little bit. You're trying to, whatever it is, you want to get better at your sport every single day. Do something every single day. And so, money, investing, performance in your career, do it every single day, and continue to put your best foot forward. And so, never taking no to heart is something that I had to learn. First couple of weeks, people would tell me no, like I'm not interested, or no, that I don't want to follow through with it. And before, I'd get a little salty, like I see that as beneficial. Why don't you see it? But you just understand that not everyone is going to get on the same page, and just understand that what you do is beneficial, and the next person might. And then again, if they say no, guess what? The next person might. If you truly believe that what you do is beneficial to people, you're going to keep trying no matter what. And then the people that do see the benefits of it, they're going to work with you, and then you're going to help them accomplish the things that they want. And so that's kind of what I feel has helped me be successful to this point. Is I truly believe and have a good understanding of what I do, and I just continue to just stress that to all the people that I meet, all the people that I work with. And, I just keep going. A bunch of people tell me no, but guess what? I keep on going. I know that I can help with a lot of things, and I'm just, waiting for the right people to give me the opportunity to help them and put them in a position to accomplish what they want.
Yeah, I think, man, consistency and persistence, it conquers all things. And I think, like we kind of mentioned, you want to don't even worry about the people that don't see any interest in the financial plan. Focus on the people that are going to say thank you for this information because your services are needed. This industry needs us. They need African American men instructing and helping people with their finances. And I wanted to kind of dive more specifically into when it comes to just African Americans saving for the long term, investing, planning for retirement, it tends to be a lack, as far as when we're looking at other ethnicities such as Caucasians or Asians. We tend to sometimes be behind in the totem pole. And I was reading some information online that really talked about how African Americans, their median household net worth is very low compared to Caucasians. It's a big discrepancy. And I wanted to ask you, how can African Americans really break the cycle and really create wealth for themselves and also for their families?
Yeah, for sure. So the biggest thing is education. Just understanding the right things to do, right things are, and understanding the wrong things that people are doing, and just recognizing that. Because the first step is recognition. When people come to me and they say like, they tell me straight up I'm a bad saver. I'm like, that's cool. The first step is you understand that you're not good at saving. So now we want to do something to fix it. So understanding that there's better ways to go about reaching the goals that you want, and then taking initiative on those actions. And so I reached out and I worked with a guy whose family is Italian, or he's European, from where his family originally immigrated from. And they came to the United States, and I was talking to him. He was like, yeah, my family's always put their money in real estate. I'm like, well, at least they were putting their money into something. So I know, me personally, my dad puts his money under his bed. and there's no ROI on money sitting under your bed unless you want dust. That's like your return. And so that's something that I'm educating my family on, and my parents, is that there's different tools and things that you want to use to grow your money rather than just storing it and just holding on to it. And so, my dad didn't grow up with the knowledge I was able to pass on to him about, how to manage money and how to do things the proper way. And then the guy that I just mentioned, whose family put their money in real estate, that's when I approached him, he said that that's what he wanted to do, is because that's what his parents did. And so, at least that's education that's being passed on and something to do with money rather than just hoarding it away in a place that's not really going to be beneficial. So, the biggest thing is just educate yourself, meet with the right people, and understand. Because even myself, we don't know everything.
We still learn.
That's perfectly fine. There's not one person that you're going to find that has the answer for every single thing. So you just find the people that are educated in what you want to do, and work with them. They'll help you get there a lot sooner than you doing it by yourself. Because even me personally, it was a pride thing. Asking for help. And that's really what it is majority of the time, is that people don't want to put their pride aside to ask for help. And then on top of that, outside of the pride thing, is it's 2020. There's a lot of people that are scamming. That's a given. And that's so true. No one wants to be a dummy or feel like they got gypped on something, because there's a lot of stuff that's fraudulent in the world today. And so it's completely understandable. You just got to make sure that you ask your questions, know kind of what you're getting yourself into. But in order to break the cycle, is you got to be educated. You got to know. So something that my boss he tells me, he hates when I call him boss. He's the managing director of our office. He tells me, he was like, the biggest thing, because he's actually African American himself, and so he was telling me how with our culture, that what will happen is, no matter how successful we get in our life, we don't have the proper things in place. So when we pass away, our kids, they start back at the bottom. And so he used the analogy of like a hotel. So say that we're right now, we're on the path, we make it to the 50th floor by the end of our life. We don't want our kids to have to start back at ground floor, right, level 1. And so he's like, other cultures and other ethnicities, they have the knowledge of what to do. So like when they drop off at the 50th floor, their kids are starting at the 50th floor and keep going up. And so you don't want to have to keep recycling and starting back at zero every single time. But that just comes with the knowledge of understanding, how do we not start back at zero? And then once you kind of understand that, you build yourself up. Our cultures change. Just because you're taking the initiative, learning what to do and what not to do, and then acting upon it. One of the biggest things that my managing director told me was that he was like, in Jewish communities, they're usually wealthier. He was like, what they do is, and it blew my mind when he told me this. He said what they do is that they usually are very close knit. They usually live in tight communities, or whatever the case is there. And he said that what they'll do is like the family will get together and they'll put life insurance on the oldest member of their family, which seems kind of messed up. It seems kind of messed up, but you know, but in the reality of it, it's smart because unfortunately, you know, no one lives forever.
Yeah, that's true.
And so, you know, what the family will do is they'll put life insurance on the oldest member of their family. And, you know, when that time comes, guess what? They all get an immediate return on investment on what they put, because you never put more money into life insurance than you're going to get paid out. And so they do that continually. And so guess what?
As other people in the family continue to keep getting older, they just put it on the oldest.
They just keep putting it on the oldest. And guess what? Every time someone passes away, you know, there's a benefit of it because, you know, what they understand is that, you know, our time's going to come. Let's set up the next generation. Let's continue to build our family up. Let's continue to keep our name around. And so that's what it does, is that they do that and it continues to recycle. You know, more money is poured out to the next generation. Then the next person passes away, more money is poured out to the next generation. And so it's just super smart, but no one thinks of that, because like I didn't even get exposed to life insurance until a couple of years ago when my dad got his first policy. And I was like, life insurance, what are you doing? And then he explained it to me of what it is, and I was like, why wouldn't everybody do this? Like, it just it makes too much sense, but you don't know what you don't know.
That's true.
And so just being able to ask questions and understand, and this kind of circles back to the last thing, you know, kind of what we talked about me being successful, is that I've been fully open to asking questions. You know, I ask questions all the time. and they tell you, you know, wherever you go, they say ask questions, ask questions, ask questions. There's no stupid questions. Which sometimes there is, not gonna lie.
That's true. That's true.
But you just ask questions because, you know, at the end of the day, regardless, because I hate asking, because I sometimes I do feel like I'm bothering somebody, but guess what? They don't tell you, like, stop asking questions. You keep asking questions because all you're doing is you're building yourself up. You're making yourself more knowledgeable. You're able to, you know, do things differently that, you know, your family couldn't or didn't know before, and that just helps guide your path and make it that much smoother. So ask questions, and, you know, find the right people that can help get you to where you want to go.
Yeah, I believe also, man, like you said, when it comes to us breaking the cycle and just building wealth, you know, with our families as African Americans, it really just starts with us. It starts with you, whoever is watching this video, of really taking the time to educate yourself on your finances and asking questions, reaching out to people that can really give you a sound foundation and being able to build, you know, your finances. Because if you don't ask questions, like, you're really just not trying to just build your intellect. You know, it allows you to be able to build your intellect when you are inquiring and trying to figure out how you can make something better, how you can figure out a better process for yourself and your family. And I wanted to touch on what you just mentioned about with the managing director, how he talked to you about how Jewish families, they put their life insurance policies on the oldest person in the family. What I'm wondering is when they do that, are they doing a permanent policy? Are they doing a term policy? Are they saying, okay, this older person, that we plan on him not living longer than 5 or 10 years? Or are they doing like a permanent policy and then they just take the payout on the rest of the family? Like, how exactly are they doing that? Between those policies?
Most of the time they do permanent policies, just because when you got households, and so just an overview of just insurance.
Yeah, just explain it for someone that may not know the difference between permanent and...
With term, there's term insurance and there's permanent insurance. Term insurance is a lot cheaper, but what happens is you have a specific term until you pass away for you to reap the benefit of what the life insurance is worth. And then there's permanent insurance, where, you know, no matter how old you get, the insurance is always going to stay. So of course permanent insurance is more expensive, but there are a lot more benefits. And again, we can get in the weeds on insurance, but that's just the basic overview. It's term, lasts for a specific term. Permanent lasts your entire life. And so what the families will do is, you know, because just think, if you're bringing multiple households into the mix, you're not bearing the cost of one person's paying everything. And so what the household will do is they'll all, you know, say, we'll put this much for the insurance, and they'll collectively just pay the insurance off up front. So they'll put what the whole payment for it is worth up front, and then they don't have to worry about it anymore. The insurance is always there. And so just again, a quick blurb on insurance is, like, when you put that much money into an insurance policy up front, it grows very fast. It's just like because permanent insurance works is that you put money into it, that money grows over time. And so if they're putting that much money up front, their money is growing the whole time. And then, you know, when the unfortunate times of that family member passes away, then it's distributed out. And so, you know, they're not risking their money of saying, oh, you know, granddad has to die within the next 10 years, or all that money we put into it's gone.
Gone.
So they're ensuring that they're getting a return on investment no matter what. And so again, carrying on to insurance is that, most insurance companies make a lot more money off of term insurance because, say they put whatever the cost of the insurance is up front, and then granddad lives past 10 years, what the term was lasted, and now that money's gone. So the insurance now just made whatever the people put into the policy. But if they got permanent, the insurance company's gonna, there's no way that the insurance getting out of paying out whatever the death benefit on that policy is.
Yeah.
And so, they make sure that they guarantee that they're gonna get a return by go ahead and just getting a permanent, and then 10, 20 years, it's still a giant, a couple $100,000 return, which makes a huge difference.
Yeah. And one thing that I wanted to mention, I know we kind of talked off camera, just like the differences between, permanent and term, and the advantages and disadvantages. I hear a lot from things that I've read that with the permanent policies, the cash value that builds up in the policy, most of the time it tends to be kept with an insurance company or is given in commissions to an agent. Can you kind of touch on, and you kind of briefly explain how insurance companies actually make more off a term, which is new for me, but can you kind of talk on what exactly happens to that cash value? Like with Northwestern Mutual, like if someone, you instruct them on getting a permanent policy and it has cash value in it, what exactly are you explaining of what's going to happen with that cash value, how it's going to be paid out to a client at the end of the policy?
Yeah, and so what I like to explain is, because with permanent insurance, you keep your coverage for life. And so you put money into it, your money is growing over the lifetime you have it. And so at the end of the policy, do you have the option of taking all the money out? You do. But let's say, you get to the end of your policy, there's $400,000 in that policy. What reason would you need to take $400,000 out of that? At bare minimum, you would just want to take distributions out of it. And, that's not going to be the only thing that you have. Like, you're going to have money in your 401k, your IRA, your savings account, your investment account. Like, you should have money in all these different buckets to make up, kind of a well-rounded financial picture. And so, but in terms of like payments and costs of insurance, that's why it's super big, and super important for people to vet the insurance company, like understand who they're working with. Because there's Northwestern Mutual, Max Mutual. Like, the word mutual means that the company is not made up of shareholders. Like, they're not selling, they're not on the NASDAQ. They're not, they don't have to, please and make profitability to please the stockholders. And so everything that you put into that company, the majority of the profits are going back to you as the person who owns their policies. And so, if you look at some companies that aren't mutual companies, you're paying for their insurance, but guess what? They have to report profitability to make the shareholders happy. And so, companies that are publicly traded, they're going to have more fees. They're going to have more, all these different things. They're going to charge you more because guess what? They have to report profitability. And so the great thing about the company I work for, with Northwestern Mutual, is us being mutual. 9 times or 10 times out of 10, we're paying dividends back to our policyholders. And so that's another reason why, it's super important to understand who you're working with, what company it is, and to also look at other options. Check your options, because looking at a policy that's cheaper isn't always the best option. Because I've had plenty of people that have insurance that when it comes time to make a claim, they can't get their claim paid out because they're with either a fraudulent company, or the company just had like loopholes, or something, or the company went under. Like, there's all these different things that you want to make sure that you're aware of. And so, the one question you ask is like, what questions or what do you need to know in terms of when you take the money out at the end? It's just understanding how your money is growing in the policy, and then you shouldn't be in a position where you have to liquidate the entire thing. Because if you're doing everything right, you have a well-rounded plan. You have investments, you have a 401k, you have IRAs, you have your life insurance cash value, so that when it does come that time, you can take money out of each of those buckets. And the biggest thing about having the options is taxes. And so now it's like, all right, where can we take the money out that's going to be, we're going to be paying the least amount of taxes on it. And so with your investments, with your 401k, like or your IRA, all of that money is you're paying taxes on capital gains. Your taxes are transferred or deferred out to when you take the money out. With your Roth and with your insurance, the money that's put into it, you already paid your taxes on it, so when you take it out, it's tax-free distribution. And so again, you want to be in a position where that's what we're worrying about. Where can we pay the least amount of taxes? Because one thing that we talked about off camera was people are upset with Trump for paying a little bit of taxes. Like it seems bad like that he's making all that money to paying the least amount of taxes, but if you were in this situation, you would too.
Exactly.
You would find a way that you can keep more money in your pocket, because that's something that I help my clients do. I say I'm gonna put you in a position where we're gonna save the most money that you make is gonna go to you, not to the IRS, because that's the goal. If you can find those loopholes and you can do the things correctly, guess what? You're gonna keep more money in your pocket because no one's willingly gonna pay more taxes.
Exactly.
and that's just the essence of it, is that you do what you can, you position yourself to have that option, and more money that you make stays to you and not to the government.
Yeah, I mean, it's what wealthy people do. A lot of people was getting upset at Trump, and it's like, that's what millionaires and billionaires do. They keep their tax bill low, and they have a very large income, and that's how you should really approach it. And I believe, like when you were saying with the insurance, if you have a permanent policy, and let's say it does have cash value in it, you may not have to pull from that whole entire policy. If you have IRAs, you have, your 401ks with your employer, you have your money in real estate, you have it in other buckets where you almost become self-insured. So something does go wrong, okay, you can pull a little from your insurance policy, but you have money in all these other streams of income. So that's the goal. You want to just make sure you're diverse in everything, and it's great how you were able to just explain that. So one other thing that I wanted to discuss is just the racial inequalities between African Americans and Caucasians within the financial industry. I read online that there's only throughout the U.S. 1,200 Black certified financial planners, and there's overall about 87,000 certified financial planners across the country. So it really shows you that it's a predominantly white industry. With that being said, can you talk on the importance of us being financial advisors and also encouraging other Black young men like us to work in this profession?
Yeah, so it's super huge, and the opportunity that's presented, because it is very limited amount of numbers of us that are doing it. And I talk, again, we talked off camera, and one of the things I told you about was when I talked to the University of Miami, and I talked to a lot of the students there about, financial literacy, and one of the questions they asked me was very similar to this, is, the difference in ethnicities and cultures. And one of the big things is that, is it harder? Of course. Because, there are biases that, is it fair? No, it's not. But, just because things aren't fair doesn't mean that you have to succumb to the things being difficult. And so, me being an athlete, right, or anyone that's watching that was a former athlete, if you got good grades, people are like, oh, you're an athlete and you're smart, because people have a bias that as an athlete you're not smart. But a lot of times, when people ask me how you do so good in school, I wouldn't say it's because I'm smart. I just say because I work hard. That's all it is. And so, being African American, you do have to work hard.
You do have to. We have to work 10 times harder.
And that's okay. If you want to be successful and you want to get to where you want to be, you do the things that make that happen. And so if it is working harder, you do it, because that's going to get you to where you want to go. You're not going to just say, oh, it's not fair because it's a rougher road to go upon. You take the lumps. Is it fair? No, it's not. Should things be different? Of course things should be different. But just because things aren't fair doesn't mean that you succumb to the difficulties. And so one of the biggest things is that you just got to work 10 times harder, and that's perfectly fine. And so one of the big points that I hit on when I was talking to the students and the faculty at the University of Miami was that, yes, things are going to be difficult. That's a given. Do we want things to change? Or just look at 2020, all the reform and all the protests. Yes, like the stuff is being presented. It's being announced. Awareness is being made on those things. But just because things aren't where we want them to be right now, that shouldn't affect where you get in life. So biggest thing is that you got to work harder.
You do,
because especially in finance. People, when you think, like, if I was to say financial advisor, think of the first picture of someone that pops in your head.
It's
It's
just
not
an older white male.
It's not an African American.
It's not.
It's not at all.
It's not.
And so, you know, for sure, there's always a bias of, you know, when someone thinks of financial advisor, they don't think of me or you.
Exactly.
They have that depiction of what an advisor looks like. And so, you know, the biggest thing is that how do you make yourself different? What's your value proposition? Because every advisor, you know, they have to take their exams. They have to have a certification. So, you know, on the ground level, you're the same as everybody else.
Yep.
But what's going to make you different? What's going to get you past that bias of you know, you're not what an advisor should look like. You know more. You invest in yourself. So, you know, one of the biggest things that I've been doing is I read, and on top of reading, asking questions. You know, so reading, asking questions, educating yourself. Because it's going to take that much more to get you to where you want to go. And one of the biggest things that I hit on earlier was that, you know, I've done very well. You know, I'm one of the top performing advisors in our entire district, and it's just because, you know, I work Monday through Sunday. Yep. You know, I'm making calls at 10 p.m. at night. You know, there's not a time where I don't work. And you know, people say you work too hard. I'm like, yes, I work too hard because I'm trying to get to where I want to go.
Gotta get it.
And so just last week I got an email from, you know, just like the managing director of all of our office saying the subject line was "hard work pays off." And you know, I have a meeting with him on Tuesday, so you know, fingers crossed on where that goes.
It's gonna be a success. It's gonna be great. Great news.
Fingers crossed on where that goes. But again, it's just because, you know, I'm continuously working hard. You know, Saturdays I'm not going out. I'm putting plans together for people. Like I'm positioning myself to be successful. Is it harder? Are there a bunch of people that, you know, probably don't take a meeting with me but take a meeting with somebody else? Yeah. Of course. But guess what? I'm going to continue to reach out to more people. Exactly. I'm not going to take, you know, I'm not going to let the rougher road prevent me from achieving my goals and impacting people, because I'm pretty sure that's what you're in the want to be in the industry for as well, is to help and impact lives. And so, you know, I know my purpose and I know what I'm doing it for. And so anyone that has the aspiration of getting in this career, understand it's not going to be easy.
It's not.
But if you're in it for the right reasons, because, you know, anyone can go into a career because they want to make money. You can make money doing anything. So, but
if your purpose in there.
Yeah, exactly. Money's not the driver, because things are going to get hard in any career that you're in. And if money's your only motivation, you're not going to make it through that career. So if you're someone that wants to look to get into this career, just understand that you're going to be presented. You're going to already be at a disadvantage because you're not what they expect you to look like. And so you gotta invest in yourself. Make sure that you dot your I's and cross your T's, because you're going to be scrutinized harder than other people, and that's okay. If you know what you're doing, do it, and do it 110%, because that's what it's going to take for you to be successful. And like I said before, is that fair? Not at all. But you know, don't let the odds prevent you from getting to where you want to go.
Yeah, you're absolutely right, man. I mean, you can't allow it, because, like you said, just because it's a tougher role, it's not as many of us in the industry. I know when I seen the statistics, it makes me even want to go in the industry even more, because there's a need for our services, and there's a room of opportunity for us to grow and to be able to just be able to have an impact on other people's lives. And like what you said about just not doing it for the money, you know, you really want to have a purpose within this industry, because when the going gets tough, you want to be able to fall on your purpose. And I believe that, you know, it's about me just wanting to build generational wealth within the Black community, doing something that I necessarily wasn't taught growing up. You know, like we kind of talked as well, you know, before we did this episode, is, you know, our parents really we're in a position where we're teaching our parents, we're teaching our family, and that's a big purpose, you know what I mean? Because we can really add value, and we can change the generational curses that we seen growing up, and we can create just, you know, more generational blessings moving forward. So, you know, I totally agree with you, and I appreciate you just sharing that perspective. Now, I also wanted to talk on, you know, just some other things under industries that you're looking at. I know a lot of people have been talking about just Bitcoin, just cryptocurrency in these last couple of weeks have been going crazy, but just with the stock market as well. I think with that election week that we had between Biden and Trump, a lot of people expected it to be volatile that whole entire week, and we have been seeing some tremendous gains with the Dow, with the NASDAQ. with the S&P, and I just kind of want to get your approach on what are some industries that you're looking at that's going to continue to grow in the future, and what are some companies that you got your eye on? I mean, even if it could just be industries, you could generalize. Sure. You ain't got to just say, Apple, Microsoft, for sure. Whatever you got your eyes on as an advisor that you're instructing your clients to be in.
No, for sure. And so just understand that with everything on a high right now, crypto, S&P down, Nasdaq, everything is really up. So just understand that there may be a pullback.
It's going to be a pull. Yeah, it's definitely going to be a pull.
Because everything is riding super high. And so, I don't know, people follow me on Instagram. At Malek 21 Barber.
Yeah.
But I've been posting about some of the gains that I've been receiving on my portfolio, and they're incredible. Every week, it's like every day is green. It's green. It's green.
Me too.
But that's not how investing goes. And so right now is definitely something that's different.
Yeah.
And just because this time right now is very profitable for a lot of people, don't expect it to always be like this.
Exactly.
And so the biggest thing I would say, just in terms of like investing in crypto, is that yes, it's booming right now. Everything is going really good. Everything is very hot. But just be comfortable with the time that it's not.
Yeah, it's volatile.
Because investments, there are risk, and so you do have to understand that. Crypto is even riskier.
Yeah, it is.
Because when was it? It was 2017. Was it 2017?
Yeah. When did it drop? Crazy.
Bitcoin was where it's at right now.
No, and it would drop crazy.
It dropped down to what, like 2, 3, 4,000?
Yeah, so it was around there.
So right now, Bitcoin is trading at around 18,000. 800. So I've been in for a while now, so I'm good.
Yeah.
So I'm feeling good on that.
Yeah.
But just understand that things look good right now, but in a week, in a month, it could be back down to 4,000 or 5,000, and that's just kind of the risk and the thing that advisors and someone that's helping you with your money, should make you aware of. Is that yes, it's good, and yes, it's something that we want you to be in, but you shouldn't put your whole life savings towards it because it's something that's very risky. With crypto, I think down the line it's going to be huge.
Yeah, it's the technology that I think a lot of people are going to end up just having in their business. I feel like it's just a lot of people are going to end up putting like the crypto blockchain. Even if you look at Visa, PayPal, they're now giving the option of people on PayPal can now trade and they can exchange currencies on their platform. So a lot of companies are becoming aware that this Bitcoin is here. It's here to stay.
And so, crypto is definitely something like if I watch CNBC every single day because again, it's just where we get the education. So it just adds on to what I mentioned before, that you want to consistently be educating yourself and being aware of what's going on in the world. But yeah, some of the biggest investment managers, portfolio managers in the world are starting to say like Bitcoin is something that you want to have in your portfolio. But they do say have a small percentage of it just because of how risky it is.
It is.
And so it's kind of similar to a lot of people that approach me with like investing in real estate. And so what I do is I show them a chart that shows them the performance of real estate from like 2004 to 2019. And some years are really high, some years are really low. And so I tell people that you don't want your money or your investment to be on a roller coaster. Like when you're in a position where you got to get an emergency fund built, you have a solid investment account that's giving you consistent gains. Then you start allocating more to those riskier investments because now you're in a position to bear the risk if that portfolio drops or if that one thing you're investing in goes down. Because at the end of the day, you can just sit. And it doesn't matter because if it's down right now, guess what? 2-3 years, it's going to be up. Because I'm assuming the people that were in Bitcoin when it was 18,000 before sold out when it dropped. But guess what? Now they're probably kicking themselves because right now it's back where it was before.
Right back.
And it's only probably going to go. I feel that it's only probably going to go higher.
Oh yeah, it's going to go higher.
But in terms of off of crypto, and XRP is another crypto.
Yeah, XRP.
There's a bunch of small
Ethereum.
There's a bunch of small cryptos that if you have a few dollars to put into it, I would say do it. Let it sit because who knows where it's going to go 10-15 years. That $10 could turn into 20,000.
Yeah.
That if you just let it sit, you just never know. And that's one of the reasons why I first got into Bitcoin. I was like, I don't know where it's going to go, but I'm going to just let this money sit. And see where it goes. And like I said, I'm glad that I did it. But in terms of sectors and just back into the market, stocks and things like that, with coronavirus really shutting everything down, that's one of the big reasons why tech has been going insane this year is just because everyone's staying at home and work from home being a new thing, that tech is going to be now very more integral into what businesses are doing. And so I think the tech sector, is it going to have its ups and its downs? Of course, but I think that's going to be super, super profitable. moving forward. And then, you know, some of the companies I'm looking at, like you can never go wrong with like your Apples, your Microsofts, your Amazons, you know, the big companies. Yeah, you're not going to go wrong with those. Like, yes, are they going to be? They're going to have ups and downs, but in the long run, they're going to, you know, they're not going anywhere. So you can never go wrong with great companies. But in terms of like some smaller companies, I've been telling my close friends to get into Plug.
Plug? I never. This is my first time hearing it.
Plug, and I really started getting heavy into investing in January.
Okay.
Plug was at $2. I bought 250 shares at $2. Plug is now at 20. I think it was at $25.
Oh man.
I've been telling Plug for the longest time.
What do they? What do they specialize in? That company?
Energy. And so the one reason, the biggest draw that I had with Plug was that they're closely affiliated with Amazon. Amazon uses them. With like they're partnered with them, and so a lot of what Amazon does, they use Plug as their primary energy source.
Okay.
And so Amazon's not going anywhere. Last week, Amazon just announced that they're doing something with pharmaceuticals. Yeah,
pharmaceuticals. Yep.
So Amazon is going to be in every piece of our life. You know, in you know the near future. They're doing everything. Their grocery stores, their e-commerce, their pharmaceuticals.
They cloud with AWS. They cloud based.
They're cloud based. They're doing delivery. Like there's not anything that they're not going to do. And so you know, you just understand that companies that are affiliated with them, you know, should be profitable and should, you know, continue to grow with them. And so Plug, like I said, was huge. And I did my research on it, and I got in forever ago. And you know, it's been a great play. And then another company that I'm looking at is a company called Purple.
Oh yeah, okay.
I'm pretty sure, you know, most people probably see.
Yeah, I believe I have heard of them. I've seen it on the ticker on CNBC from time to time.
And so Purple is some people have probably seen the mattress commercials on Instagram or on TV. Like Purple is a mattress company. And they're trading, I think now at $30. And so when I first got into it, it was like 18, and that was probably a month ago. Now it's at 30. And so if you look at companies like Tempur Sealy, which again, this is mattress companies. It's the small things that people don't really think about.
Pay attention to.
So Tempur Sealy is a big mattress company, and they're trading at like, I think they want to say they're around $60, $70, $80, somewhere in that range. And they're saying that Purple is kind of like the next Tempur Sealy, or it's going to surpass that. And so right now it's at $30. And it had a pullback, only pulled back to 29. And again, this is getting really like analytical.
No, it's good. I'm listening.
On stocks.
No, that's good.
But it had a pullback to 29. And so if it pulled back to 29, I feel like that's kind of where the low is, and it's only going to go up. So there's a lot of upside for that company. And you know, they're direct to consumer. So like if you guys know, was it Mattress Firm or is that what it's called, Mattress Firm? They have all the
it is.
So Mattress Firm, you know, they have physical locations. Purple doesn't, so that's not overhead that they have to deal with. And they're selling their mattresses direct to consumer, which again is helping them be profitable. So you know, it's little things like that. They're doing great digital marketing, because I know every time I pull up, it could be the government. And I'm talking about it all the time. I'm just getting Purple ads all the time. And so I'm seeing it, and they, like I said, they ship right to consumers. You know, they have a great product, and so I think that's gonna be a good company moving forward. But there's a bunch of companies. You know, like it's Tesla, is it gonna have its roller coaster of rides? Yes, but I think long term they're gonna be good. NIO has been another one that's been doing great this year, but again, that's gonna be another very volatile company to be in. And all these are like tech and energy and digital stuff. And so, you know, like I said, tech is huge, because that's kind of the future. And so just, you know, you want to put your money in what's gonna be, not what was. And so that's the biggest thing.
Yeah, I agree, man. I think, like, you know, don't buy at the highs. Like, even though the market is doing really well right now, like Malik said, you got to prepare for the unexpected. And if you're not diverse with your portfolio, like someone told me that, you know, you want to have stocks, bonds, insurance, you know, real estate, you know, and even the index funds is a great option to investing, because you don't have to put as much risk into one single stock. You know, I believe I do invest in also individual stocks, but I also have index funds. And with Tesla, I haven't necessarily invested in Tesla because I feel like it's very volatile. But for people out there, there's a great index fund that has Tesla in it. It's called ARK. It's ARK. ARKK. Yeah, that's what it is. That has Tesla in it, and they're a very good index fund, and they've been up this whole year. I don't know the exact percentages, but there's a lot of good plays where you can just get index funds and you can diversify so you don't have as much risk. And I believe, like with the industries, like along with Malik said, with technology, You have, like, I believe as the economy's starting to slowly open back up, you got to have your money in retail, consumer discretionary. People are going to be wanting to go out and spend their money. There's a real good index fund called iBuy. They're a retail online ETF, so you can play it from both sides. You know, an ETF, an online ETF, and then a consumer discretionary ETF that's people have to go out and spend their money. I also think like healthcare, you know, healthcare, pharmaceuticals, like what you said with Amazon. It's just amazing to see with Amazon how they've been able to just put themselves in almost every industry possible that you can think of. It's an excellent company, and I gotta get into Amazon. I'm not now, but it's a lot. But that's one company. It's probably gonna be at 10,000 by the time we get in our 40s, 50s. Even before then, it's been going crazy. So definitely, you know, listen, take some notes on those industries and stocks that we mentioned to you all. One last thing as we're coming to a close, I wanted to ask you is, you know, you mentioned how you're reading books to kind of help with your craft and just becoming a more fiduciary advisor. Are there any other credentials that's on your list that you want to get to help you like kind of master your craft as a financial advisor?
Yeah, so we were talking about this a little bit again. There are so many different credentials and accreditations that you could have, and again, it's really in the industry that you're in that specializes. Like, you know, you look at nurses that have a million letters after their name, like, you know, MSN, BSN, RN, you know, all these different things. And in finance, it's the same thing.
Yep.
And all they do is just add to how much you know, and it makes you, you know, like you got that stamp of approval to say that, you know, I am a master in this field. So, you know, one of the ones that I think we both agreed upon that we were trying to get, or we want to get, is a CFP, which makes you a certified financial planner. And getting that, it requires, I think, like 10,000. There's a lot of requirements.
Yeah, it's a lot of requirements that you got to take.
Not anybody gets it. And so, you know, once you do get it, like, that just gives you a stamp that says, like, this person has put the time, has got the education to do all this. And it's just something that just builds your rapport and just helps you have a better, you know, footing in terms of, this is what I do and I'm really great at it and I really know what I'm talking about. And then another one is, you know, I think I told you it was the CHLU, the Chartered Life Underwriter, which is, you know, which is insurance. It just makes you an expert in insurance. And a lot of young people don't see the value of insurance and how it makes sense in a financial plan. But you know, if it's not today, where you see it's important, you're going to see that it's important in 10 years when you have kids. And you know, at one point or another, you're going to need it. And that's one thing that a lot of families do understand. Like, even, you know, like I said, my dad, he didn't know much, but he found life insurance, and like you know, he wanted to get it. So it's the same thing. Like, every household will want to have life insurance, and so you know, that's something that I want, just because I know it just stamps the stamp of approval that I'm an expert in that, and so it just builds rapport that people that I don't know, they're like, oh, he has that accreditation. He knows what he's talking about. I'll reach out to that person. So it just, you know, you present yourself as you're a master in this field, that field. Because there's so many. Because me and my friend, I think it's like a CH. What's the investment one?
You mean the Chartered Financial Consultant, the CFC one? I think it's called CHFC or something like that.
So one of my close friends, he works at a independent investment broker, or an independent investment firm. And so we were talking about all the different credentials that we wanted. And he was telling me all the ones that he wanted on the investment side, and I was saying all the ones I wanted on the insurance side. Because investments are great, but not everyone gets into it. Most people have it because a lot of people will have 401ks, and 401ks are an investment. And so, you know, once you are done with your job, guess what? You roll that over, and you're going to probably go to someone that has, you know, that says that I have this accreditation. And so the one thing what the accreditations do is now you're able to charge more for working with people. And so that just goes with building a rapport and showing that you're an expert in that field. Because, you know, if you go to a doctor that is like top-rated neurosurgeon that does this, and this, they're going to be a lot more expensive to work with than it's going to be, you know, someone that doesn't have all those, you know, list of awards and accreditations. So it's the same thing. You know, we are both very knowledgeable in what we do. We don't have, you know, that says that we got, you know, this thing, but guess what? We're going to work with you regardless. We're going to provide you with pretty much the same information as someone with that, you know, that stamp of approval is, but the only difference is they're going to charge you to have the conversation. Because
Yeah.
I know at Northwestern, the CFPs, they charge for consultations.
Yeah, I've seen that too.
They-
Even with the company I work with Fidelity, a lot of those consultants, analysts, they're going to charge for them consultation calls.
Yeah.
So.
Yeah, and so that's what an accreditation gives you the ability to do, to say, like, I know 1,000%, and I got the stamp, I got the little letter next to my name. If you want to talk to me, you're talking with an expert, you're going to pay me for that. And so, what some people, I think, don't understand is that, most advisors, they don't charge you to have the conversation to put something together for you. Because I know, like me personally, even if I got my CFP, I don't think I'm still not going to charge people to have the conversation, because I feel like if someone's willing and wants to have the conversation on what they can do to better their future, I'm not going to charge you for the conversation. Like, it doesn't make sense. Like, I'm in the business because I want to help people, and I'm going to make it as easy to do as possible. And so, what I do is, I meet with someone, they tell me what they want to accomplish. Boom, I put a plan together that says, if you want to accomplish X, Y, and Z, you need to do 1, 2, 3. If you go through and do 1, 2, 3, that's completely up to you. But at least I was able to provide you the information on what things you should be doing or you should be looking at. That's going to help you. That's going to help you get there. And so there's a bunch of accreditations, and you could literally mix any 3 letters, and it's probably going to be an accreditation that you can get. But yeah, so that's huge. All it is just more education, more studying, more tests, and that's what it is. And with more studying, more tests. Comes more letters, higher pay, and potentially higher income earning people that are going to talk to you.
Yeah, because they're going to see you have those other accreditations where they may want to work with a CFP, or like you said, the chartered life underwriter, someone that specializes in just insurance. And I think that all of these accreditations, these licenses that we have to get, it gives us a competitive advantage, because I know taking the SIE is honestly what allowed me to get my foot in the door with finance, and it allowed me to be able to get a great understanding of the securities industry. So I think it just gives you a competitive advantage, so you can be able to be competitive in the market where there's so many other financial advisors that are trying to get clients. So, and it allows you to be able to build just your intellect, gives you an intellectual edge. And I love it, man. It's a process, and I know we're going to continue to keep working and becoming more educated so we can perfect our craft. So the last thing I wanted to ask you is just kind of tell the people how they can connect with you, and if they do want to inquire in your services, kind of your website and all of that information.
Yeah, so there's plenty of ways. Like I said before, there's a million already, and this is something we talked about off camera, was where in 2020, where we live now with internet, social media, there's a million ways that you can connect with me. I'm on Facebook, I'm on LinkedIn, I'm on Twitter, I'm on Instagram. I post informational content all the time. I ask you guys to ask me what questions you want to know. Like on my Instagram, we talked about this before. I do Money Mondays and switch it up, Finance Fridays.
I like that.
I do days where I'm like, just ask me what you want to know, and I'll post something that gives gives general information, and then I'll write you offline or kind of on side and in direct message, and I'll say, is there anything specific that you want to know about that question? So I'll give general information, and then I'll ask, is there anything else that you want to know about it? And we can have the conversation there. And so, Malek Barber, like I said, LinkedIn, Instagram, Twitter, Facebook is where I'm at. On Instagram, Malik21Barber. My website is malikbarber.nm.com. There's plenty of ways that you could find me, and like I said, any questions, I'm very willing to help. Because one of the things that again, we talked about this, is that I love working with people around our age. Just because that's an underserved market, especially people that don't have millions of dollars or hundreds of thousands of dollars to invest, because the big name guys, like in our companies, that's not who they're looking at. They're not trying to help someone that doesn't have much. And it's not even that they don't want to. It's just because they usually have families to feed. They have they have obligations. So that they have to put their priorities where they're going to make the most money, or where they're going to be able to be profitable. With me being younger, you being younger, we don't have high expenses. It's not like we have mouths to feed, or we have a family to provide for. Right now I'm in a position where I can do it, and I can work with anybody. Because I don't, if some people are like, well, I'm probably going to be a waste of your time. I'm not, I'm probably going to make a lot of money from working with me. I'm like, that's perfectly fine. I don't right now I'm in a position where I don't need to make a lot of money. also anyone, I'm just here to help because, you know, I say like, you know, right now, you may not be in a position where, you know, you could do anything. Like we might just be looking at a budget. We might just be looking at how can we repay your student loans. But guess what? I'm gonna help you do those things. And what's that gonna do? That's gonna put you in a position that you're gonna be better financially, you know, in a year or two. And guess what? Now you're gonna be in a position where we can start heavily looking at investments. We can start, you know, insurance can make sense because the best ways to, you know, grow wealth and retain wealth is investments and insurance.
You're right about that.
You know, if you're not there yet, I'll show you the ways that you can get there faster. And so one of the things that I tell, because again, I like working with people around my age, but a lot of people our age want to push this conversation off. You know, I get hit with the, I'm not, you know, I'll let you know when I get in that position. There's never a time, like there's no wrong time to start planning. Like my brother, he's 20, he's still in school. Guess what? We have a plan together. Because all you're doing, like if you know, you're not in a position to plan, so does that mean you don't have goals? Because some people, and again, it's about, you know, economics and cultures and what you grow up, you know, kind of thinking, you know, what your mind's preset. So some people are probably like, well, I probably don't need to buy my first house until I'm in my 30s. So, you know, that's preset what you're thinking. Like, yes, you can push that conversation out, but why not put yourself in a position where you can buy a house when you're 25, 27? You know, why not push that timeline back so you're hitting your goals a lot faster? And so that's all the conversation does, is it puts you in a position that you're able to hit your goals a lot sooner than you thought you would be able to. And so, you know, definitely willing to help. There's no wrong time to start having the conversation, because all, you know, by pushing it off, all you do is push back how long it takes for you to accomplish the things that you want. And so that's why I really think, and I truly believe that the earlier you start doing the things the right way, the better you're going to be in the long run.
I definitely agree. Well, you heard it, everyone. Definitely reach out to Malik if you want to just learn more about financial planning, you know, budgeting, saving, planning for the long term. He's a great point of contact, a great friend of mine. So definitely reach out to him. And as always, if you all can continue to like, subscribe, and share this video, that would be greatly appreciated. Ways you can connect with me, my Instagram, Kevin Jenkins. I'm also on LinkedIn, Kevin Jenkins. Facebook, Kevin Jenkins. I'll put my link tree in the notes. I have all of my information on there, how you can connect with me. And also, if you all can support the Patreon page, that's where I create exclusive content in the areas of finance, business, and investing. And you're able to actually support this channel and just this movement of financial literacy. So definitely check that out. That's on the link tree as well. And I just want to thank you all for joining. Thank you, Malik, for coming on the show. It was a pleasure. And you all take care.
Have a good one.